China's economy grew by 6.1% in 2019. Per capita GDP reached $10,276, a new record for the country. Although some look at the figure and see China's consistent high-speed growth over the past 3 decades, others have called the number a reflection of China's slowing economy, the smallest GDP increase in 29 years. So how can we reconcile these two sides to understand China's economic performance in 2019 and beyond, and what new challenges will 2020 bring? Welcome to a special edition of The Point with me, Liu Xin, coming to you from Beijing. I'm pleased to be joined by 3 guests here in the studio: David Blair, a business commentary writer at China Daily; Gong, professor of economics at the University of International Business and Economics and a current affairs commentator; Einar Tangen. Gentlemen, welcome to The Point and Happy Chinese New Year.
Thank you.
Yeah, same to you.
So let's break down these numbers. China just released the latest number at the beginning of the year, saying that China's economy reached 6.1% growth, GDP growth for the year 2019. As I said, many people interpret that as, or see it as, the lowest in almost 3 decades. On the other hand, at the beginning of last year, the target for China's GDP growth was set somewhere between 6 to 6.5%. And let's also not forget that compared to other countries, for instance, for Germany, we have 0.6% GDP growth for 2019. For Japan, we had 1%, and for the United States, we have 2.3%. So putting all of these numbers together into perspective, what would you say about the 6.1% that China achieved? David?
Well, trees don't grow to the sky is the first thing to remember. And China's been growing fast for 40 years, really. So 6% is very high growth internationally. And if China achieves anything like 5 or 6% growth for the next 10 years, its economy will be totally transformed again. So it will really be a fully high-income country by 2030 if that's achieved. So there's nothing wrong with 6.1% growth. Any other country in the world would be happy to achieve that. I think, just one more point, I think the key point is structural change. The question is the decline in growth being caused by macroeconomic demand factors, and is there enough stimulus, or is there a need for structural change? There are some economists who argue that there's big demand for additional stimulus, and that additional stimulus can keep the economy growing at a high rate for the next 10 years. I think structural change is more important.
Okay, we will go into that in just a moment, but first, just the overall look of the Chinese economy. John?
Yeah, I think the 2 versions, 2 interpretations of the economic growth here in China, not necessarily in conflict. They're talking about the same thing, I think. I totally agree with David that as China is more moving towards a developed country camp, the growth rate is naturally going to slow down. No country in the developed world has anything more than 5%, right? So I think it's all natural to see China's growth rate coming down. And I'm actually even less ambitious as you are. I think if China can grow at something like 4 to 5% for the next 10 years, this country is doing very, very well, in my opinion. So I think this growth rate is very healthy. 6% is very good. And I think next year, if we maintain something close to 6%, between 5.5 to 6%, we're already doing a very good job.
So is it a question of a glass of water half full or half empty when you read these kind of headlines on many Western mainstream media saying, this is the slowest increase in 3 decades? It is factual, it is accurate, but do you think they're trying to portray a more pessimistic tone of the situation?
Oh, absolutely. This is a PR war, and what you have is on the U.S. side, and even in Europe, there's a shared idea, and they echo a lot of what David has said, in that they believe that there has to be structural change. Now, China has achieved everything it has through a different form of government. All right, and this is seen by many in the West as at odds with what they think is the only answer that there is: liberal democratic capitalism. And the question remains, which one will be more competitive? Now remember, even at 6.1%, China is adding an economy equal to Australia to its total every year. You cannot do that. There's what we call a regression to the mean. You cannot go up, 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 up forever. Otherwise, China would be the entire economy of the world. So, you know, yes, there is going to be regression, but GDP, and we talked about this before, there's no such thing as valid measurement anymore. When you start talking about, and how many discussions have we had about this? GDP is not the measure. And I think
what would be the right measure then?
It's money in your pocket, and I mean disposable income is incredibly important. It's jobs, all right, education, it's quality of life, and I don't mean in a soft terms and things like that, but unless you have these types of things, movement going forward in terms of jobs and disposable income, how can you run a society which in developed countries is 80% about choices, not about necessities, not what I need to live, but what I want, what I desire.
So in that category, this is veering off our subject, by the way, but it's so interesting. I want to go a bit further down there. So in that category, how do you think China managed in 2019?
Well, China's way ahead of the game in 2019. Disposable income was 3 or 4 times what it was in the U.S. in terms of increase. You're seeing an explosion in terms of the consumers. Now, consumerism is not the answer. Just consuming more does not make you a better society.
No.
But at the same time, there's being more attention paid to the disparities that exist. And this is where this campaign against poverty is very important. These desire by the government to show that it's bringing the rest of the nation forward, not just a few.
Okay.
Well, just to put things into perspective, I would say, speaking of quality of life, I think today in China, there are about 200 million people living in first-tier cities whose lifestyle is very much similar to the lifestyle
20 million.
200 million.
200
20 million
yeah.
people, about 20 million people. Very similar lifestyle to the lifestyle in Europe, for example. Now, we all travel people, you've stayed in Europe for many years, and you can immediately tell that a very similar lifestyle. We live in high-rise buildings, housing is very decent, right? We have transportations, very decent transportations. A lot of people have own cars. They travel around the world. I mean, they take a vacation like once, twice a year. The kind of lifestyle is very similar. So I think this is definitely the developed world of China. But the thing is, it's only about 1/7 of the society, right?
Sure.
So, we still have a lot of room to catch up.
Right.
I think the most interesting number in any economy is not GDP, it's the rise of average real wages. And in China, I don't have the 2019 numbers, but from 2010 to 2018, average real wages in China increased more than 11% per year. That's more than a doubling in 8 or 9 years in people's average real wages. And think of how that transforms lives.
Yeah.
The big problem in the United States is that average real wages until the last 2 or 3 years have not increased for 40 years.
Maybe
that's
why
a big danger to any society.
that's why people are so disgruntled.
Yeah,
Well,
of course that's the reason they're
David has hit
disgruntled.
on a really important part, because when we start looking around the world at all the discontent in a lot of middle-class societies, whether you're looking at Europe or America, even Australia, other places, and you see these things, why? Because there is this middle-class discontent, this idea that wages did not increase.
Yeah, let me put an academic spin on this.
Okay.
In trade theory,
I want to move on. Okay, but go ahead.
In trade theory, there's something called factor price equalization. It means that among free trading nations, the factor prices, wage being one of the factor prices, tends to equalize eventually. So, you see this phenomenon in Japan, in South Korea. Now you're seeing this happening in China. Wages rapidly rising, converging to the level, not converging yet, but I think it's getting there.
All right, China is just announced that its per capita GDP, again, we have to come back to, because it's a convenient index for us to gauge where we are. Per capita GDP of the Chinese people has just risen above the $10,000 mark. Of course, China still belongs to the middle income tier, but although at the higher echelon. And then there is also this news that the Chinese population has just surpassed 1.4 billion, really very significant number. So put all of what we said in perspective. What does 2019 or this year 2020 will mean in terms of a milestone in China's socioeconomic development?
Well, that income level, remember, that's measured in dollar terms.
Right.
And the RMB has been falling against the dollar somewhat. So it's even harder to raise your dollar term income when the current local currency is falling against the dollar. So what we've seen is a remarkable increase, in my opinion, of increase in people's lifestyles. On the point that was made about lifestyle improvement, When I first started looking at China, what I read everywhere was that it's only in the big cities, only in the big eastern cities that there's prosperity. But I've traveled around a lot of western China, southern China, Yunnan, Sichuan provinces, and they are starting to look very developed too. Even last month I went to a little village in southern Yunnan province near the Laos border, and there's a new concrete road being built there that's totally transformed people's lives. So it's a lot of this infrastructure being built around the country has been very transformative.
Yeah. So does the 1.4, does the $10,000 per capita GDP mark really accurately capture the kind of development that's being enjoyed around China, Einar or John?
Well, I absolutely. I think it's put China right in the place compared to the rest of the world. You know, at about $10,000 per capita is actually putting China on the upper end of the higher middle income class according to the World Bank's classification, and it's only about $2,000 away from the next up level, which is the high income category. So I think at say around 5% growth, 5 to 6% growth in the next 5 years, we're going to close that gap very rapidly, I think within 5 years. So I think my prediction is that within 5 years, China is going to be regarded as a high income class, although on the lower end of the high income class.
Okay.
But I'm going to go with David on this one. I don't care what the number is per capita and GDP. What I care about is what it buys you. What kind of lifestyle? The fact that you've had this kind of 11% increase really tells you something about people's lives changing. They can buy more. They can get the things that they want. They can spend it on education, healthcare, these types of things. So I think those are the more important things. Getting to 12, 14, 15,000. China's already on a purchasing power parity in terms of what you can buy,
well,
way ahead
one.
of the U.S. Yes.
Right. So actually,
not on per capita, but
not on per capita
total.
term, but not on the U.S. dollar term either. But you know, this middle income trap has been a term that the Chinese leadership has also mentioned repeatedly, saying China wants to avoid falling into this trap or being, you know, trapped in that situation, and meaning China wants the growth to continue in the next decade to come, to avoid the same kind of pitfall that many countries in Latin America, for instance, experienced once they reach a certain level of development. In terms of that, where is China, David?
Well, I think the problem in Latin America is that in many countries you have an elite that really doesn't want to see much of the country develop beyond that level. I mean, maybe I'm over-exaggerating, but I think that's largely true.
What about
China? And in
Yeah.
China, the government is pushing for spreading prosperity around the country. And I think that's a key point, is it's creating healthcare systems around the country, infrastructure around the country, very good 4G and 5G capabilities around the country. So I think it's very much different here. When I talk about structural reform, one thing that impresses me is how many steps the Chinese government takes to change the system just about continuously. I mean, right now we're changing the financial system to make it much more transparent, much more sort of market-based and based on market fundamentals. And that's a reform that's just part of an ongoing system of reforms.
I think you look at the countries that have fallen into the mid-income trap. The problem with these countries' economies are mostly have something to do with the stagnation of productivity gain. And I think in China, the productivity gain is mostly driven, of course, by corporate China. And if you look at the innovation, productivity gain is mostly driven by innovation, right? So if you look at the companies are doing here in China, they're investing in R&D, they're innovating, they're also expanding overseas. And I have to keep in mind that China's economic success is deeply intertwined with the global value chain story, the Northeast Asia part, trading with the rest of the world, with North America, and Chinese companies have been intertwined into this network, and they have been, getting to the international aspect of business at a very early age, and now they're expanding overseas. They're investing in Africa, they're investing in Southeast Asia. So with the expansion of this corporate China, they're being more competitive, they're innovating. So I think, I think the prospect of falling into the mid-income trap, as long as Chinese companies are investing, they're expanding overseas, becoming more and more competitive, it's not very likely, I think.
All right.
It's quite possible, it's quite likely to overcome that trap.
We'll take a very short break, and you have been watching The Point with me, Liu Xin. We'll be back right after this. Stay with us. Welcome back, and we have been talking about China's economy in 2019 and 2020. So coming back to the middle income trap, John, you're obviously very optimistic, or reasonably optimistic about the prospects, and yet it is a challenge that nobody knows, and we are faced with all kinds of headwinds. For instance, this competition or rivalry, or even a lot of containment strategy and sentiment from the United States. Einar, how important do you think these factors will be for the Chinese economy?
Well, very. I mean, the political competition is one of those things that can lead in directions that you can't see. These are black swans, unexpected events that can happen. And especially with the U.S. and China. I mean, a resumption of the trade war, tariffs, that could take another 0.3% out of what we perceive as GDP. And this is what happened last year. So, you have these situations where you have to not only have internal things that we've been talking about and how you raise them, but you have these external threats. What happens if there's a Middle East war? China's 60% of the oil China gets is from, the Straits of Hormuz. If that closes down, where does China go? Prices go up. Instability rises. There's also this issue about a global framework. Right now, it's America first. But America first, in this last year, has proven to be America alone. There's not a lot of people who are very fond of Americans if you go to Europe, South America, anywhere, in fact, other than perhaps Israel. So at this point, there has to be some sort of break. Either the United States will create a new model, which is the law of the jungle. We rule. We will use our power to get what we want from you. Or you go back to a framework in which you have countries actually talking, negotiating with each other, and obeying some sort of framework of rules.
What do you think of the Phase 1 deal that the two sides reached? I mean, although it's something that China reluctantly accepted, I would say, and at the end, it is a deal, it is a process of negotiation, and the two sides will sit down and talk to each other throughout its implementation. How significant do you think that's going to be for China's economy in 2020?
Well, we're going to have to see, because quite frankly, there are some large boxcar numbers that are attached to this. And they said that there's a snapback provision. That means that if somehow the U.S. believes that China has done something wrong, there is basically 2 months to solve it. If that doesn't work, then they can impose unilateral measures to force China to do that. But the fact is China can walk away from that agreement. So there really is not, it's not like the WTO or something like that where there's a real framework. This is a bilateral thing. Okay. In terms of its importance, it's really important to the rest of the world. I don't know that that much has changed. And the real question is, can China even buy $40 billion worth
So you think it is very, very important for the world, this
This is more important for the world than I believe either
All
country.
Right. The other two gentlemen?
I don't think it's so important for the Chinese economy.
Why not?
Trade with the U.S. is about 20% of total Chinese trade, which means that it's difficult to absorb losses in that 20%. But it's possible.
As has been shown by figures from last year,
where
honestly.
the trade is spreading through Belt and Road countries. If you go to Africa, it's dominated by Chinese companies. On the other hand, I think it's important that the tone has changed. I mean, I think that continued animosity between China and the U.S. is a very dangerous thing for the future of the world. And if we are seeing a change in the tone, and the change in there's a lot of bipartisan foreign policy establishment in the United States who talks about a new Cold War. That's nonsense, and it's very dangerous.
Do you think that is reversed, at least temporarily, by now because of the Phase 1 deal?
I hope so.
You hope
I
so?
hope so.
I'm not sure it's reversed. I think it's a temporary break on the downward spiraling of the relationships. I totally agree with David that there is no lack of advocacy, from, especially I think from the defense intelligence community, essentially, advocating a Cold War version of it. And I think it's extremely dangerous. And of course, there's also such voice here in China as well. But I think at least the leaders of both governments have come to the agreement that this is not a path that we're going to go down through. It's a very dangerous path, and at the very least, we are still going to continue to have these economic relationships. corporate China, corporate Americas continue to going to operate here in China. Hopefully, these tariffs will be rolled back at some point, such that it's not going to materially damage corporate America's operation here in China to the extent it drive them away.
But what a, okay, I know you have some burning comments.
Yeah, you know, I disagree. Look, both the Democrats and the China hawks are now united in saying that this was a terrible deal. You're starting to see more and more articles being put out by both those sides. Now, it's a bit odd when you have the Democrats on one side and the war hawks on the other joining forces against a president who they say has not been tough enough, who runs on his ability to be the toughest. So I don't think this is finished by any long shot, and quite frankly, regardless of what happens in Washington over the next year, all right, it is going to be a hard test. There's a lot of anti-China feeling, mostly fueled by a misperception about what China is.
But some people are saying, look, at least right now, there is a channel for them to vent their dissatisfaction, vent their anger if they do believe that the Chinese people or companies or government have not been living up to the agreement. They can at least go to the other side and say, hey, this is what we agreed on.
But you can't
simply easily tear it apart, something you signed yourself.
The point is that the people who are advocating sort of the version you're talking about have no sympathy at all with respect to American companies operating in China. You know, having a very good communication channel, having a mechanism to resolve the concerns of corporate America in China is not in the interest of these people. They don't want to have these companies operating here in China. They want to drive them away. So that's the problem.
There's a move to delist Chinese companies on the stock exchange.
I think if you look back 5 years ago, if you remember, the animosity between China and the United States was stronger 5 years ago, and it was largely military-based. I mean, there's a lot of talk about fights in the South China Sea, over the Diaoyu Islands. There was a lot of discussion about that. We're not hearing very much about that anymore. It's about commerce now. Commerce is less dangerous and less threatening in terms of
Secretary Pompeo just delivered a speech, and what he said, he mentioned South China Sea, and he said deterrence is not just about having this ability, this capability, but also determination to use it.
I agree. There's a debate within the Trump.
They're putting it out there in public.
I think there's a fight within the Trump administration about that.
And
we don't yet know which way they'll go.
What's the implication for the Chinese economy? That is our ultimate question, right?
Well, no, this is the problem. You have a president, Trump, who believes that you mix security and trade in any way that gives you the advantage. He's looking more at trade, but he's willing to use security. That's why you have gunboats sailing up and down the South China Seas, the Taiwan Straits, why they're selling more arms to these places. Peace is not going to be achieved through more arms.
So China set the growth target for this year about 5.9%. That's the Chinese target. In order for China to achieve these goals, what do the Chinese have to do? At least, you know, if they can't control what the U.S. side has to do. John?
I think, you know, I'm hoping the Chinese government actually does less. I think the economy has its own, you know, life. It's right now actually it's not that bad. I think. Of course, the central government's perspective is to use mostly fiscal and some monetary policies to pop up the economy. But I think by doing this in the short run, we may see some very good figures, but there's going to be an adverse impact over the long run in the next few years. So I'm a little bit concerned about it. I think even without doing a lot, without, you know, doing a lot of those infrastructure projects that are planning to do, I think our economy is still going to be okay. I think, you know,
I'm going to just completely disagree with my learned colleague.
Okay.
The fact is, China has a great difficulty with its banking system, getting money to these entrepreneurs, these small private enterprises that are, responsible for 60% of the GDP and 90% of new jobs. This is an area where the government has to do what is necessary to change it.
What about
the banking sector is indeed a problem.
Yeah. Well, a lot of people talk about the implementation being very, very important of the Phase 1 deal. Maybe the deal itself, as you say, could affect only a limited part of the Chinese economy or U.S. economy, but the whole idea of China being more open up, China undertaking greater reforms, and the force that's from outside of China to push China to do all of that, I think that's quite significant.
Well, but these reforms are for the good of China, too. I mean, there's a lot of opening up. There's marketization. The financial system is being transformed as we speak in the next few months. So I think that it's for the benefit of China. Most of the stuff that's in the deal was already ongoing, was already being implemented as part of domestic reform. So that's not going to change whether or not the deal continues or not.
I totally agree. I think a lot of the things in that agreement actually are indeed in China's interest, so that naturally there shouldn't be a implementation problem. The only thing that I'm concerned about is that, purchases, the $200 billion of purchase over 2 years, whether we can, realize that goal, buy these things at what prices, that's a little bit concerning. We don't have a lot of details about that.
There are some people who are actually worried about the prospect of this deal. For instance, this article by New York Times says that the trade pact, rather than heal the relationship, could drive the two economic titans further apart, transforming how global business is done. It says that Chinese exports to the U.S. fell by more than 1/5 compared to a year earlier. Export to the U.S. now account for just 4% of the Chinese economy. They're citing evidence to support that this is going to drive the two economies apart. What's your reaction to that?
The issue is trust. The trust has been broken. When you start weaponizing the SWIFT system, the international banking system, and say against all countries because you don't like their policies, you're not going to have a lot of friends. You're not going to have people who say, yes, I want to do business with you, because they can't. The attacks on Huawei, Ms. Meng, is coming up for for a hearing on whether or not she should be released from that. These types of things are endemic to the things. You are not personally safe. Your business is not safe, all right? And your country is not safe in these kinds of situations. You therefore have to look at how much technology is now flowing into Britain, Great Britain right now. Why? Because you can trade to the United States and China from Great Britain. And where's the money coming from? China and the U.S.
I'm most concerned about technology decoupling. I think technology decoupling is happening now, and it's going to continue in spite of this agreement being reached. And at some point, this technology decoupling...
This deal is not going to solve the differences over the tech supremacy?
No, not at all. Not at all. It's only going to enforce that, I think.
All right. Why?
I agree.
Well, I think it's a very strong determination in Washington to keep technology decoupling. I mean, this is very vital to U.S. interests from their perspective, I guess. And at some point, technology decoupling is going to spill over into some kind of economic decoupling. So I think I agree with the concern you're raising.
Okay, David,
if I were a Chinese planner, I would be in favor of technological decoupling. In a way, it's like the Sputnik crisis in the United States. This is going to spur Chinese investment in technology and indigenous development of technology in a way that, and it provides, in a way, it's a trade barrier. It keeps out some U.S. technologies and allows Chinese firms to develop.
That's a different perspective. I'm sure a lot of people will have different opinions about that. But, we welcome different opinions, and we'll keep thinking about them and talking about them in the near future. Many thanks to David Blair, a business commentary writer at China Daily, Gong from the University of International Business and Economics, and current affairs commentator Einar Tangen. And that brings us to the end of this special edition of The Point with me, Li Xin. As always, you can follow me on Facebook and Twitter using the handle The Point with Alex. Thanks for watching. You've got